Assalamualaikum and hi to everyone. We are from JBA 2721A Group 1. We will present to you guys about analysis of corporate financial performance, which is trend analysis and comparative study of HARTALEGA Holdings BERHAD and SUPERMAX Corporation BERHAD. As you guys see, we have 5 members and this is our group members. Nur AQIELAH binti HAJALI, Nur DAYANA HAZEEQA binti Muhammad SOBERI, me myself Muhammad Nur Hazim RASHIDI, IRDINA ARISSA binti ZULKIFLI, last but not least ARIFA KARMILA binti AZMAN KAMAL. To conclude our deep dive into the numbers, I would like to ground our performance in the identity of HARTALEGA itself. Our journey is defined by a clear vision to be the most trusted global healthcare product provider and a mission to touch lives through innovative healthcare solutions. Our story began in 1988, founded by Mr. Kwan Kam Hon in Kepong. We started as a modest operation with just 5 production lines, but we were driven by a singular purpose: providing superior protection for healthcare workers. That small operation has since transformed into a global industry leader. We have grown from producing 307 million gloves annually to become a titan of the sector. Today, we don't just manufacture, we lead through the HARTALEGA Academy, our dedicated hub for talent development and Industry 4.0 solution. As we look at the recovery metrics we discussed today, remember that they are backed by nearly 40 years of resilience. We aren't just reacting to market shift. We are actively designing the future of manufacturing to tackle whatever challenge comes next.
So now, let's move to the background of SUPERMAX Corporation's BERHAD. The company aims to be a global leader and preferred choice in medical glove manufacturing. SUPERMAX Corporation's BERHAD is a top global producer, exporting a high-quality medical gloves to around 165 countries around the world.
Hi, my name is Muhammad Razim, and now let's examine our profitability ratio. This slide captures the extreme market cycle we have navigated between 2001 and 2024. On the left, gross profit margin, we peaked at 43% in 2021 due to pandemic demand. However, the post-pandemic correction hit hard in 2023, where oversupply and crashing prices pushed margin to negative 9.76%. The headline for 2024 is our recovery. We have returned to a positive 0.68%, proving our cost management efforts are working. On the right, return on asset, the story is the same. After a 51% high in 2022, ROA dipped to a negative 4.4% during the 2023 downturn. But as of 2024, we have successfully pivoted back to a positive 0.24%. While these current percentages are lean, the shift from red back to green is our most critical milestone. It marks the end of the correction phase and our return to a stabilized, profitable path. Now, let's shift our focus to the return on equity, or ROE, which measures how effectively we are generating profit from the money shareholders have invested in the company. This slide also outlines why these profitability metrics are so vital to our various stakeholders. If we look at the trend chart on the left, in 2021, we started with an ROE of 0.57%. We reached our 4-year peak in 2029 with an ROE of 0.62%, which stands as the highest return in this period. Similar to our other profitability metrics, 2023 saw a significant downturn, dropping to negative 5.00%. This indicates that the company faced net losses relative to shareholders' equity during that fiscal year. However, we have seen a strong rebound in 2024 with the ROE recovering to 0.27%. This positive turn is a clear sign that we are returning to a path of value creation for our shareholders. Why do this number matters? We analyze this ratio because they serve different purpose for different groups. For our investor, This ratio demonstrates our ability to maintain growth and produce returns on their capital. Consistent profitability boosts investor confidence and supports dividend expectation. For our creditors, profitability is a key indicator of our ability to repay principal and interest on schedule. It reduces default risk and helps us secure more favorable loan terms and credit restriction.
My name is Dayana. I will be presenting the asset utilization ratios of HARTALEGA Holdings Berhad from 2021 to 2024. This ratio measures how efficiently the company used its assets to generate sales. So firstly, for account receivable turnover, the highest ratio was recorded in 2022 at 10.32 times. This indicates that HARTALEGA was most efficient in collecting payments from customers during that year. This is supported by the average collection period, which was the lowest in 2022 at 35.38 days. It shows that the company was able to convert credit sales into cash more quickly. However, in 2023 and 2024, the collection period increased to 56.20 and 17.51 days, indicating slower collections. Next, for inventory turnover, the ratio peaked in 2023 at 6.64 times. This means that HARTALEGA was able to manage and sell its inventory more efficiently in that year. In 2024, the ratio decreased to 5.44 times, suggesting slower sales or higher stock levels. Moving on to fixed asset turnover, the highest ratio was recorded in 2022 at 3.33 times. This shows that the company utilized its machinery and equipment most efficiently in the year. The ratio then declined in 2023 and 2024, indicating possible underutilization of fixed assets. Lastly, for total assets turnover, HARTALEGA achieved its highest performance in 2022 at 1.24 times. However, the ratio dropped to 0.45 in 2023 and 0.35 in 2024, which shows weaker overall assets efficiency. In conclusion, 2022 was the strongest year for HARTALEGA Holdings Berhad in terms of asset efficiency. The declining trend in 2023 and 2024 suggests the company needs to improve assets management to enhance operational performance. These asset utilization ratios are very important because they help investors, creditors, and management assess how effectively the company is using its resources to generate revenue. Higher efficiency reflects better operational performance and stronger profitability potential.
Assalamualaikum. My name is ARIFA KARMILA and now I will be representing an analysis of liquidity performance of HARTALEGA Holdings Berhad and the comparison with SUPERMAX Corporations Berhad for the year 2024. As we can see right now, the current ratio was rose from 3.92 in 3.12 in 2021 to a peak of 6.67 in 2023 before slightly declining to 5.92 in 2024. The quick ratio also followed the similar trend, increasing from 2.67 in 2021 to 6.00 in 2023, then easing to 4.92 in 2024. This indicates that HARTALEGA had enough assets to cover its short-term obligations, even though the decline in 2024 suggests some reductions in liquidity range.
My name is IRDINA ARISSA. Now, we continue with the debt to total assets ratio of HARTALEGA Holdings Berhad from 2021 to 2024. The ratio decreased consistently from 27.90% in 2021 to 11.66% in 2024, indicating that the company has reduced its reliance on debt over time. A lower debt ratio suggests stronger financial stability and lower financial risks. Next, the fixed charge coverage ratio trend from 2021 to 2024. The ratio increased significantly and reached its highest point at 664 times in 2022, showing strong ability to cover fixed obligations. However, the ratio declined in 2023 before improving again in 2024, indicating a recovery in earning performance. Next, the time interest and ratio. HARTALEGA recorded very high values in 2021 and 2022, with the highest at 585 times in 2021, indicating excellent ability to cover their interest expenses. In 2023, the ratio turned negative due to weaker performance but improved to a positive value again in 2024. That ratio is important for investors to assess financial risk and long-term stability. Creditors rely on this ratio to evaluate default risk before approving any loans, while for analysts, they use them to analyze trends, compare performance, and forecast future risks and opportunities.
Having analyzed our internal trends, let's see how HARTALEGA stands against one of our key industry peers, SUPERMAX Corporation, for the 2024 fiscal year. This comparison is vital because it shows our recovery isn't just luck, it's the result of superior strategy. Starting with the gross profit margin on the left, HARTALEGA has successfully fought back to a positive margin of 0.68%. While this is lean, consider the context. SUPERMAX is currently reporting a substantial negative margin of negative 27.17%. That is a massive 28% point gap. This divergence underscores HARTALEGA's superior cost management and our ability to maintain pricing discipline even when the broader market is struggling with oversupply. Turning to return on asset on the right, we see a similar telling divergence. HARTALEGA achieved a positive ROA of 0.24%, meaning we are once again generating profit from our asset base. Meanwhile, SUPERMAX remained in the red at negative 3.63%. The fact that HARTALEGA has moved back into the green while a major competitor remains deeply in the red is no accident. It proves that our difficult decisions, like decommissioning older, less efficient plants, are yielding real results. We are emerging from this industry cycle as a leaner, more efficient and more resilient leader. In this final section of our comparative analysis, we turn to return on equity ROE for 2024. This is perhaps our most telling metric as it measures bottom line profitability specifically from the perspective of our shareholders. Looking at the chart on the left, HARTALEGA achieved a positive ROE of 0.27%. While this remains a modest start, it marks a critical milestone, the return to value creation after a severe challenges of the previous fiscal year. In stark contrast, SUPERMAX reported a negative ROE of negative 3.90%. This gap highlights HARTALEGA's resilience. We are not just surviving the market downturn, we are recovering more quickly and effectively than our closest peers. This brings us to our final verdict for 2024. As we have reviewed today, HARTALEGA has secured the top position across all three major categories. First, in gross profit margin, where we lead with a positive margin against significant peer losers. Second, in return on asset, where we successfully pivot back to generating profit from our asset base. And finally, in return on equity, where we have restored positive value for our investor. As indicated by the best performance icon on your screen, HARTALEGA Holding Bags BERHAD stand as the top performer in all key profitability metrics for 2024. We have emerged from the industry correction leaner, stronger and firmly back in the green.
For this session, I will discuss the asset utilization ratios, which are used to evaluate how efficiently a company uses its assets to generate sales. This comparison is between HARTALEGA Holdings Berhad and SUPERMAX Corporation Berhad for the year 2024. First, let's look at the account receivable turnover. Based on the graph, HARTALEGA records a higher receivable turnover, which is 5.18 times compared to SUPERMAX 4.55 times. This indicates that HARTALEGA is more efficient in collecting credit sales from its customers, reducing the risk of bad debts. This is supported by the average collection period. HARTALEGA takes a few days to collect payments, which is 17.51 days from customers, then SUPERMAX 18.27 days. A shorter collection period shows a stronger cash flow management as the company is able to convert receivables into cash more quickly. Next, for inventory turnover, HARTALEGA again show a higher ratio, which is 5.44 times. This means HARTALEGA manage its inventory more efficiently by selling its stock faster, which helps reduce holding costs and improve operational efficiency. However, when we look at the fixed asset turnover, SUPERMAX outperforms HARTALEGA. SUPERMAX is 2.42 and HARTALEGA is 0.97 times. This suggests that SUPERMAX is more effective in utilizing its fixed assets such as machinery and production facilities to generate the sales. Lastly, for total asset turnover, HARTALEGA records a higher ratio, 0.35 times, than SUPERMAX 0.13 times. This indicates that overall, HARTALEGA is more efficient in using its total assets to generate revenue. So we could conclude that HARTALEGA demonstrates a stronger performance in most asset utilization ratios, particularly in receivables, inventory, and total asset efficiency, while SUPERMAX performs better in terms of fixed asset utilizations.
Next, when comparing HARTALEGA with SUPERMAX in 2024, we can see that HARTALEGA's current ratio was 5.92, while SUPERMAX recorded a slightly higher 6.07. For the quick ratio, HARTALEGA was stood at 4.92. Meanwhile, SUPERMAX stronger 5.50. Both companies maintain well above the typical healthy range between 1.5 to 3.0. However, excessively high ratios suggesting some inefficiency in the use of current assets, especially in manufacturing where inventory moves slowly. In conclusion, HARTALEGA displayed a strong liquidity performance but may face a slight decline in 2024. Meanwhile, SUPERMAX outperformed HARTALEGA in both ratios, suggesting a stronger efficiency and quicker response to short-term obligations.
On this page, we are comparing the leverage ratio of HARTALEGA and SUPERMAX. First, look at the total debt to total assets. HARTALEGA records 11.66%, while SUPERMAX is lower at 7.73%. This means HARTALEGA relies slightly more on debt financing compared to SUPERMAX. Next, for the times interest and ratio. HARTALEGA achieved 7 times, while SUPERMAX is negatively 32 times. This indicates significant operating loss, rendering the company unable to meet interest obligation from operating income. This indicates HARTALEGA is in a stronger position to cover its interest expenses from operating profits. Overall, HARTALEGA demonstrates better debt management and stronger interest coverage compared to SUPERMAX. Here we focus on the fixed charge coverage ratio, which measures a company's ability to meet fixed financial obligations. HARTALEGA shows a positive coverage of 5 times, meaning it can comfortably pay its fixed charge. In contrast, SUPERMAX records a negative figure of 11.82 times, which signals financial stress and difficulty in covering obligation. This sharp difference highlights HARTALEGA's healthier financial stability compared to SUPERMAX. From this analysis, HARTALEGA clearly outperforms SUPERMAX in terms of leverage and fixed charge coverage.
These are 4 recommendations. Let's take a look at profitability ratio first. HARTALEGA managed to maintain a better profitability ratio in 2024, more than SUPERMAX. Hence, SUPERMAX should improve cost control and increase use of assets by reducing production costs and unnecessary overhead to increase profit margins. Next, activity ratio. HARTALEGA has better activity ratio than SUPERMAX in 2024. Hence, SUPERMAX should increase capacity utilizations by maximize the use of existing machinery to enhance fixed assets turnover. For liquidity ratio, in 2024, SUPERMAX is better than HARTALEGA in all financial ratios. Therefore, HARTALEGA should allocate surplus liquidity and focus on collection to maintain high level of quick assets. HARTALEGA can reduce excess current assets through better inventory and receivable management. The last one is debt ratio. HARTALEGA has higher debt ratio indicating more risk than SUPERMAX in 2024. Then, HARTALEGA should reduce the reliance on debt by pay off high interest loans. Besides, SUPERMAX should monitor the interest rate so they can pay the interest stably.
The conclusion, HARTALEGA is more stable compared to SUPERMAX. By looking ahead the outlook for the glove industry, it is expected to recover gradually, driven by rising global health awareness, the continued expansion of the healthcare sector, and the possibility of new outbreaks that could further boost demand. HARTALEGA is well positioned to capitalize on this recovery, supported by its efficient production capacity, ongoing investment in automation, and a strong focus on innovative value-added products. Meanwhile, SUPERMAX will need to accelerate its operational transformation, emphasizing automation, tighter cost management, and market diversification in order to close efficiency gaps and strengthen profit margin. Before the end of this video, if you have any question to ask, you can write down below at the comment section. Thank you for listening and watching.